Hello and a very warm welcome to Express Mobility. Today we have been joined by Mr. Sunjay Kapur, President, Auto Component Manufacturer Association. He will talk about the impact on the component industry with regards to the budget announcement, economic policies, COVID-19, and new technologies like EVs and connected. Mr. Kapur, welcome to the show.
Thank you.
So first of all, I would like to understand, how do you see the budget and current economic policies supporting the auto component industry's growth prospects?
Thank you. So the government has been very encouraging. When you look at the PLI schemes that have come out for the auto component space, as well as the automotive industry, they've been very encouraging. A lot of money is going into the benefit from that scheme. The FAME2 scheme as well has been extremely encouraging in terms of investments in future technologies. We were happy with the budget in that there's a lot of stress and focus in terms of infrastructure development, road building. This is indirectly impact the automotive industry in a positive way. We've seen degrowth in commercial vehicles over a long period of time, and now we're seeing growth in that segment. We're also seeing growth in off-highway vehicle segment, and all this is resulting from the fact that there will be a lot of construction and money going into infrastructure development. There's a lot of talk about battery technology. The government is again focusing on electric vehicles, clean energy, clean mobility, and all of these are definitely going to impact positively, impact the auto component industry positively. So, from our perspective, it's been a good budget. A lot of talk about employment as well. Again, employment will generate more consumption. More consumption will lead to increase in vehicle sales. So we're hoping that all this results in what the government has said, and now it's really in the implementation of it.
Yeah, very, very well put. But one of the most teething issue is currently the semiconductor shortage, and a lot of passenger vehicle segment sales have been impacted due to that. How do you see that situation currently? Will it crease out, and can India become self-reliant in that space in any time?
Okay, so this is sort of a larger question. There is definitely headwinds because of the fact that semiconductors have become a choke point. The number of semiconductors in a vehicle are increasing. The number of semiconductors used across electronics and across gadgets are also increasing. And this has definitely put a stress on the capacity of semiconductors. We cannot see any quick resolution. Investments are large. Time to market is long. And therefore, we're hoping that we can overcome this problem with the current capacity that is already installed across the world. We had some challenges in some of the factories, whether it be in Houston or in Taiwan or in Japan, etc., and those have sorted themselves out, and therefore we hope that the production will come back up and we can see some kind of relief. However, I can't say for certain that we will see any major relief for the rest of the calendar year, at least. It's definitely a good opportunity for companies to invest in. If you've got the capital and you've got the resources to put in large capital with a long wait period in terms of IRR, it's a great industry to be in because of the fact that semiconductors are only going to increase. Today, as an industry in the automotive industry globally, we buy 7% of the consumption of semiconductors, and we hope to go up 20% only because of the number of semiconductors is going to keep increasing. As you know, with the disruption in the automotive industry, with electrification, with connectivity, with telematics, and all the stuff that's happening now, the use of semiconductors and chips is going to increase, and therefore, it's a great opportunity for any country to invest in. However, my sense is that this will have to be a public-private partnership. We're going to have to seek government help in terms of putting up capacity for semiconductors and putting up fab facilities in India.
So now, as you mentioned about technologies like EVs and connected telematics are disrupting the overall auto industry. How do you see Indian auto component players gearing up for this future disruption in the mobility sector?
So I feel that Indian auto component players will keep abreast of all the changes and the investments in technology. We've already started investing in technology. Almost 30% of our output goes to exports. from what we produce, locally. And therefore, that shows us that, we're keeping in line with the R&D that's required. Of course, private sector's role is to really invest in technology. We started our businesses with joint venture partnerships, with technical know-how or licensing agreements. And, this will continue. And this trend will continue. We've, built a strong auto component business based on partnerships, and we'll continue this where it is required. We've also been able to adapt and adopt and learn technologies over a period of time. And therefore, several companies are exporting. We've got several IPOs, which is international purchase offices in India from tier ones as well as OEMs, very active in India, looking for sourcing from India. The China One Plus strategy has been of great help, in terms of developing technologies for international players. And given that this is happening, we're going to have to keep in line with the disruption that's happening in the industry, and therefore invest in technologies that cater to the disruption that's happening. And therefore, I feel, we're geared up as an industry to supply to the automotive industry as it disrupts, as electrification happens, and as you mentioned, telematics and connectivity evolves.
So, very large auto component players have been investing in all these technologies. They have been trying to JVs, mergers. But what happens to the mid and small size companies in the auto component space? What is your opinion on that? How do you handhold them? What is your strategy?
So, that's a good question. So 65% of our membership at ACMA is MSMEs. We've put up centers of excellence. We've got training institutes, skilling and development. We're doing whatever we can to bring that part of technology to the smaller businesses, to the MSMEs. And I feel that MSMEs are going to have to bring in joint venture partners like we did when we started our businesses and learn that technology. And tier ones are going to have to handhold in terms of developing the smaller suppliers, because again, the supply chain in the automotive industry is extremely complex, and we're highly dependent on each other. We're a well-integrated supply chain, highly dependent on each other. And therefore, we're going to have to keep investing in the smaller suppliers as well to make sure that they're investing in technology and they're able to keep up with the change and the disruption that's happening in the industry. So it's really a matter of, making the right investments and bringing in the right partnerships wherever is required.
Coming back to the impact of COVID-19, I know now we have slowly adapted to the situation and it's also receding right now. And how do you see the auto industry growth in the next fiscal year for both auto component point of view as well as from the vehicle sales point of view?
So, it's definitely, we've had a strong first half of the year. We've seen exports grow. We've seen the domestic market grow. And based on just the first year's performance, we were expecting a 10 to 15% growth because of the fact that, the domestic industry will grow as well as exports. However, given the headwinds, we're being cautiously optimistic. At this point, I won't be able to put a figure to it and a number to it. However, we have to be cautiously optimistic. The good thing is that the demand exists. We've had a lot of headwinds in the past, over the past 3 years, be it in the commercial vehicle space, with axle load norms, with GST implementation, with the slowdown in terms of chip shortage, which we talked about, with logistics, with raw material price increase. So we've seen a lot of headwinds. However, the demand remains, which is definitely a positive thing. Demand in passenger cars remains. Demand in commercial vehicles has come back. We're seeing some sort of decline in the two-wheeler space. Again, that's because of structural changes and increase in costs at the entry level. However, we're also seeing the consumer move up the value chain in terms from A class A vehicle to B, etc. So we hope that we can overcome most of the headwinds, but again, we need to be a little cautious about what challenges we'll face from the supply side. And for the first time, in a long time, I can say this is not really a demand problem; it's really a supply problem today, and we need to overcome this. And I'm certain that we will.
So, what kind of revenues do you expect from the auto component industry as a whole?
I mean, again, like I said, we were in the first half has been strong. The second half we've seen some sort of headwinds with regard to like I just said, with all the supply challenges we've had. So I can't put a number on it, you know, but I would say, we've had 27 billion in the first half. So let's see what the second half has in store for us.
Okay. One last question to understand, what kind of initiatives you have been taking since you have taken over as a president of ACMA, seeing the current disruption and the headwinds you're talking about. What is the plan for the next year?
So, the role of ACMA is really to create a globally competitive industry. And, the president's role is really to take forward the mandate that has always existed and continues to exist, and with the disruption that's happening, this is a great opportunity for us, as an industry to be in part of the disruption and the growth that's happening in terms of electric vehicles, in terms of sustainability, in terms of clean energy, and really, again, bringing a globally competitive industry, bringing the industry to global competitiveness by investing in technology. So from ACMA's perspective, we want to be able to give back to the 800 members that we have the opportunity to invest in technology and the opportunities to supply. We've seen a lot of interest from different countries with regard to coming into India from technology partnerships. We want to bring that to the membership. We see, like I spoke about, the international purchase offices in terms of opportunities to supply. There's a lot of stress and focus on localization or deep localization, as we call it, again, because of the fact that we don't want to be dependent on other economies from the supply side. And really, our role in ACMA is to bring those opportunities to the membership and help them in growing their businesses and building globally competitive businesses.
Thank you so much for giving your time today. Thanks.